Yo, what's up, my people? This your boy, Mr. FX. It's been a minute, it's been a while. Man, I don't know what happened. Been off social media, and just a request that I got a request that you guys wanted to have the YouTube videos back, and let's have a look. It's Friday, it's a little bit late. I was to do the video yesterday, but I got busy somewhere and I got held up. So I apologize for that. And let's just do this for today. It's Friday. Give you what I think, and then you're going to wait for the report to come out. Then probably you're going to see what you should be expecting come next week. But we have to start seeing the data as early as now. Remember, I use fundamentals to look at the market and technicals to time the market. I have a flu. I might not be audible enough. So let's start by looking at the dollar being the basket of other currency pairs and index. So we have to look at the dollar itself and see what to expect on the dollar. Otherwise, the dollar future, actually, I look at the dollar future, not the DXY, but the dollar future. Where is it? It's here. So we're going to look at it. We're going to look at this market fundamentally and technically. So, okay, I'm going to get rid of all my analysis here. And we look at this, guys. Why do I look at the dollar futures? Because these are the real contracts in the market, the real positions. And technically, I just come here to time the market. So I want us to do something different today. I know that we have our indicators, our tools, which are the example, which are the COT report, COT index, cycle, and valuation. So if I just pull out my COT report, just like something here, you see, we get to see that you're seeing this information that you're going to see here, but maybe you don't understand what is happening here. So let me take you the manual way. Let's look at this market manual way away from the tools. We'll only use them when you're looking at the valuation, because for valuation I have to. So we'll have to go to the C, and guys, make sure that you drop your comment, what you think of this video. I believe this is going to be the video with a lot of very important information that you need as a trader. Fundamentally, remember, fundamentals moves the market, moves the price on the chart, and the technicals, we use them to time the market. Probably I want us to look at the dollar, and as it loads up, I want us to look at the dollar. And when you look at the dollar, I want us to see what is happening in the market, long term and short term. And the website I'm using, this is a www.tradingstar.com. If you want, it's free, you can reach out and check it out. So I'm going to look at the dollar index. And where's the dollar index? The US dollar is here. So let's click on this one. And I'm going to try as much as I can to explain. Make sure that you watch this video if you really want to get anything solid for you. Formation. So we're here and we're going to look at the dollar. And this, guys, this is information that comes out every week. Make sure that you check out every week, every weekend, like today's Friday. So according to the Kenyan time, around 1 a.m., that is Saturday, 1 a.m., Friday midnight, then 1 a.m., we get to see the new update on the information. So my tools, they update once, and also this website gets only updated once. If you get time, guys, just go through this, read what is here. You'll get to see what is here, and it's very useful. As you can see below is the commitment of traders, which is a COT report for US index. The dollar is being used as an index because it's used as a valuation tool, like to measure the value and the strength of other currency pairs. Okay, COT legacy report futures only. You see, it's just going to show you the futures only. The futures, these are the currency, like not pairs, but the derived currency. So when we look at it with the COT chart, this COT report for US index is of 2025 February 18. So this is the last data that was there. 18 last week. Was it last week? I don't know. Let me check on, guys, just a minute. Let me confirm on my calendar. Was last week 18 really? Just a minute. Let me confirm. I want to make sure that I'm giving you very solid information. If we get a delay, we'll always get the delay and you'll always be aware. So this, which month is this now? February. Let's see, when was date 18? 18, last Tuesday, last Tuesday, last Tuesday, last Tuesday, last Tuesday, last Tuesday was 20 what? Last Tuesday was 21. Yeah, last Tuesday was 21. So this means there's a little bit delay. Really? 18, 18, 18, let me say 18. 18 is supposed to be on Saturday. Saturday, when is today? Today is a Friday, so let me see. Friday, today's date 28. So Friday 28, the month of February. 18, when is 18? 18 is Tuesday. And today is Friday. Yeah, it's correct, it's correct, it's correct. The information is very correct. Sometimes it did delay. That's why you need to check the date. So this one is correct. So it always comes out every week. Every week. So let's go a little bit down here. So what I want us to look at here, we're going to look at the contracts of the dollar. And you can use these guys as a way. If you want to be a day trader and you want to rely on the information on this side, just let me know. Drop your comment. I'll prepare a video for this, of course, for you guys. And make sure that you subscribe, man, and you like. So apologize for the noise on my background because kids are playing around. So let's go ahead. We'll look at the dollar. What is happening here? I'm going to focus on this market long term. The commercials, if you want to talk about the non-commercials, we'll talk about that. But at the end of the day, I'm looking at the commercials here. And I want to see long positions. These are 7,275 contracts. Short positions, 24,332. So look at this and we look at the total contracts of both commercials and non-commercials. We see the long contracts, this 35,298. Then this is 35,587. So when you look at this 35 and you look at here, we can tell that this market, the dollar is expected to sell, okay? So if the dollar is expected to sell, we can come down here and look at the commercials. Remember, I'm a swing trader, so I'm looking at the commercials, but for day trading, guys, also you can reach out to their comment and I'll be able to make a video for that, for day trading. So when you look at the commercials, the big around 76.98%, they are selling, while 23.02 they are buying. So this means that probably they are abandoning their long positions and aligning themselves with the short positions. Then the retailers are on this other side. They're always doing the opposite. When the commercials are selling, they'll be buying. So for the trading, always look at this. So when you look at this, I can tell that the dollar is expected to fall. So let's go to the dollar and do something there. If the dollar is expected to fall, what should we expect on the dollar? Okay. So look at this here. This is a dollar. We're expecting the dollar to fall. So if you're expecting the dollar to fall, in terms of you want to, like, technically want to see the dollar go down. So we need to identify high quality supply zone that might turn around the market. And I look at the current price at the top, and I just drop to a daily time frame. And I try to look at this high quality supply zone. Let's see what we have here. Okay, you can see this. This is our current drop, base drop. You can see here we have indecisive, decisive, then explosive candles. So I'll mark from this where the market, the leg out where the market steps out. And this is our supply zone. This market happened to run into this one. Supply zone. So this is the area of interest that the price is reacting from. You can see hit that level and has dropped. So here, for the market to drop again, you can see, according to this was the opposing. See, a drop, a base, then a push to the upside is a market imbalance. This was another opposing area of interest, but this one is a short term. That's why you see you're pushing higher. But remember, our bias is that we are very, very much bearish on the dollar. So what do I expect? I expect the next area of interest. So I'll remove this line here. And the next area of interest, I have remember I'm bearish, so I need to identify a high quality supply zone. So there's a current price. So I look at here, I see there's a drop, a rally, a base, a drop, but this area seems to be of low probability. I need to have another zone up here of high quality because I can see the market rollover gap. So here is where my supply zone is, high quality supply on the future. And I want you to see the difference. Remember, I'm looking at the futures of the dollar, which cannot be manipulated. Let me show you how DXY looks like so that you get to see the difference. DXY is full of manipulation. And you see, look at DXY. This is the supply, the only valid high quality supply they have here. And for me, this one will fail. This one has high chances of failing. There's something up here that is hidden, and that's why I prefer to use the futures, because here, look at this, we have this zone, and to me, this zone was of low probability. But let's again weigh in. Let's look at something more. Let's look at something more. So allow me to dig a little bit into this using my tools. And I'm not changing much. I just want to look at what the non-commercials are doing. Those are the hedge funds, those who are buying the dollar. Because when you look at this, we see that, of course, retailers are buying. You have seen on the other side, I've shown you the table. But I'm interested to look at the hedge funds. I want to make sure that they are abandoning their long positions. And yes, that's what you get to see there. So having that, I think it's enough. If you want more details, I don't want to waste a lot of time. I don't want this video to be long enough. But if you want the long videos, let me know. So I'm going to look at the valuation, because the dollar is affected by the treasury bonds. And every time we get the interest rates increased, they weaken the currency. When there are cut, all right, when there are cut, they strengthen the currency. So here I'm looking at the value of the treasury, the US treasury bond. I hope you do research and get to know how it affects the market. The US treasury bond, this one, it affects the dollar a lot. So I'm looking at it, this one, and I want you to see why I'm looking at it here. Let's do something here. Let me show you. This is the dollar, right? Let's look at, let me compare the dollar and the interest rates so that you get to see why I prefer to use the interest rates. Can you see this? I don't know which color is this. This one will always track this market closely. It will always track it closely. So you can see these are the interest rates, this line here, the US 10-year bond yield, and you can see it's projecting. Expect the dollar to do what? The dollar to continue dropping. So you can see this push on the dollar up. This is a fake move. This is a fake move. I expect the interest rates to continue dropping. That's why we are right. When I look at it, where it is right now, we are at how many percentage? 4.25, 4.246 percentage on the dollar. But this is something that we'll talk about, you guys, if you request it, then I'll prepare this for you. So anyway, the dollar is here, and The problem, the dollar cannot sell right now, and I look forward for the dollar to go up. Remember, we want to sell the dollar, but you have seen that from the commercial perspective. Let me show you. I'll go back. From the commercial perspective, we see that the non-commercials are long position 72%. This means that the dollar is gonna buy short term, then later on it will drop. So if we go back to where we are right now, I expect the dollar to still push higher. And the reason is here. Let me show you the simplest reason. You know, I'm trying to combine information so that you can understand. Look at this. The treasury bond are undervalued. This means that the dollar cannot sell when it's undervalued. It will buy most of the time. So I'm going to look at it in a period of maybe a record of 1 month. And if you look at this valuation, interest rates against the dollar, we can see what happens every time we are like example overvalued, the dollar will fall. So this means that for us, for the dollar to fall properly, we need to be overvalued for us to sell the dollar properly. Let me give you a little bit of back test. You can see here we were overvalued versus the treasury bond, took some time. And let's see here. Yeah, took some time. You see a drop, took some time and dropped. So this was against the trend, but you can see the impact of overvaluation of the treasury bond versus the dollar. You see here, and we got a very, very massive drop. And again here, overvalued. See the drop here. We overvalued. You see a drop. Are you seeing that, guys? So you can see with that, you can see that tells you a lot. And let me show you when you are undervalued, what happens. Undervaluation. Okay, let me go back to around 2003. Like I'm back to 2003. This is undervaluation. We got a push, a rally to the upside on the dollar. Undervaluation here, a rally to the upside. Undervaluation, treasury bond, a rally to the upside. Undervaluation here, you see green candles, guys, and even here, see green candles. There's a push to the upside. Every time we undervalued, we got that push to the upside. Look at this, undervalued, a push higher, undervalued, push higher. So again here we were undervalued. Here we went higher, and here see some green candles. Even if you just you see these guys are daily time frame. So seeing two candles means a lot. Look at that. Look at this, and the value and the push to the upside. So here that you are undervalued, what happens? I expect the dollar to go up, and you can see already it's pushing higher. So this tells you that why the dollar is not going to fall right now, and we expect those major currency pairs to continue dropping. So the dollar, I want to see it going higher, because right now it has left this, a drop, a base, a rally here. This is a zone that we must be aware. We can mark from this or this one. So all of this is just a very useful zone of market imbalance, and this is a very nice demand that the dollar still gonna play around here. This means that maybe good trades will get them from Tuesday. So on the dollar, I really want to see the dollar push a little bit higher. I want to see the dollar push a little bit higher in terms of technicals, and also fundamentally, we have seen the dollar versus the treasury bond is still undervalued. So get to hit this level, then doesn't expect a very, very nice smooth drop to the downside. So this means that now that we have the idea of the dollar pushing higher, our bias on the dollar is that we are bullish short term. Then I know that on the other currency pairs, I should be expecting a push to the upside, guys. So let's look at the most major currency pairs. We'll start looking at the euro, the most favorite pair for most people. So look at the euro. As I've said, guys, that today I don't want to go so much into my tools, but I'm going to use this website just because it's been a long time. I know that you guys are excited. Maybe you want to see how I'm looking at the market fundamentally. And let's look at, I don't know if you guys are audible enough. Like, not really feeling good. Let's look at the euro, and we are here. So short term, where is the euro going? We look at the long contracts 170,320, then the short contracts 221,740. So short term, the euro is gonna sell. Then long term, we are here. Long term, we're looking at 361,239. Then long, then short term here 335,054. So we see that short term euro is selling euro future, but long term we expect it to buy. So you can look at here at this total contracts, and you can see again five. We look at this total contracts here. Here we see long 562, short 587. So when you look at this, the total contracts here, this might not be perfect as we look at it, but I want always to look at the commercials because they show you where the market will go long term, right? So let's look a little bit lower on the table. So right here, we can see most people are paying to learn all these informations, and I'm just showing you for free. Uh, when you look at this, the non-commercials, short-term 56%, those who are buying the hedge funds 43%. So we know that these are non-commercials and this is a short-term sell. And you look at this long-term, 51% long position. Those are abandoning their short position, 48%. So at the end of the day, the euro is expected to buy. The euro is bullish, but let me confirm with my tools for proper clear setup. I go to the weekly time frame and I jump into my COT report. When you look at this, you can see retailers have been selling, so we don't want to sell. And if you have to sell, you have to sell short term and be very careful. And you want to look at the non-commercials, and you want to see that they are abandoning their short positions because, right, some things, don't know if I should say here, but anyway, you see that they're abandoning their short positions as the market's making a divergence of lower low. We see that the hedge funds are making lower high, which means that this is a fake move to the downside, and uh, we're going to see the market push higher. So let's look at the Marshall net positions. You can see they are very bullish, but you don't know how bullish they are until we use the index. So when we look at the index, we can see here they are above. If you are above the green line, that's a buy. When you're below the green line, that's a sell. So the red line, these are retailers. The smart men are up here, and you can see you expect it to go up. Let me show you the last time we were up, it was here. Look at that and here, and I'm sure you can see the behavior. I'm sure you can see how the market went up. Every time we are above the green line, look at that at here, and we went higher. And you see these are weekly time frame. So seeing one candle, that's a 1 week. So seeing two candles, just seeing three candles or four, that's a whole month. So here again, we are up, and you can see. So expecting this thing, expecting it to buy, to go higher. But I don't know how long these commercials have been positioning themselves. So let's try to see how long they have been bullish, and because it's a record of the last 6 months, so we can see last 1 year how they have been positioning themselves. Remember the commercials are the hedgers, and when you look at it in 1 year, they are still bullish. Look at it 2 years, 2 years, the last 2 years, wow, they are now extremely bullish, while retailers are extremely bearish. So you can see here we're getting to see a lot that is happening here. all right, this 3 years period of time. And guys, as you can see, this means that we are going to get a buy on the euro. So let's look at the valuation versus the value of the euro versus what? Versus the dollar. So here I'll be looking at the value of the euro versus the dollar. And what we see here is that when you measure the value of the euro against the dollar, we are overvalued, and this means that you cannot buy, but rather look for a sell. You see, when you're overvalued, when you go above the green line, this is just the dollar. This is not RSI. You see, we are measuring the value of the dollar, future exact. Ah, man, apologize for that. So see here, overvalued again, we are going to drop. So this means that, guys, right now, it's not a good time to do it to buy the euro. And let me look at it long term. Long term, I remove this. And the long term, you can see are overvalued and you're going to drop. We're going to drop. Then let me that like just this like the last 30 days we're still overvalued versus the dollar versus the euro. So we're going to go up. But let me look at the future of this. And for me to do this, I'll need to use something different. And this done differently. We need to be overvalued. And you see, we have been undervalued for a while. And this long term, because every time we are undervalued, here we'll get a buy. And here we'll get a buy. And here again, this was a buy position here. Very nice moves in. But right now we already come out of undervaluation. So we can work with the period of 1 month for us to get a perfect valuation target. And we see that here we need to be on daily time frame. We are overvalued. So the dollar is expected to fall more, to continue dropping for us to buy. So we cannot buy right now, but we know that we are going to get a buy move. So we can apply our technicals here. And for me, when I look at this market, a high quality demand that I want to participate in is around here. This is my high quality demand for a buy. So this means that I can still look for sales come Monday. So here, and the reason is this is the only place I see a valid uh, demand zone according to me. And if we get to buy here, we have a market rollover gap here. If we get to go back there, then this is going to be a very nice trade to buy. So when I have this, then this means that on the Euro USD, I'm expecting the same. So here I want when I look at this, I'm not seeing any valid zone. I need to go to a bigger time frame to see. On a bigger time frame, I have this weekly zone. Then on the daily time frame, there's nothing much here. So I like to use a different website to get a 5-hour chart on the Euro USD. Let's try to look at it here. Just a little bit, guys. Let's load up. So we're going to look at the Euro USD. Euro USD, and I want to identify a high quality zone a high quality zone using the period of, need to use my own account. Euro, Euro, open. Okay, sorry. No, too bad. Okay, let's do something. Let's do something. I'm back. Let's click on the Euro USD and see very quality zone, high quality zone that you need to identify. Seems to have a problem here. So let's go to a daily time frame. Let's go to a daily time frame and see what we get here. This is a lot of information. So what is my screen now? What if win? Okay, let's try again. USD. Let's change the time frame. Well, I think my internet is also not okay because when it me request time out, I'm able to fetch data from EURUSD. Let's go to daily. Let's first go to the weekly. Does it mean I don't have an internet or what is happening? Let's load it from here. I want to understand why is it not giving me that. Oh, oh man. Oh, we ran into a problem. We ran into a problem. We ran into a problem. So how do we do here? Seems, but on this other side, the chart is okay. I think I'm just somehow disconnected from my internet. Let me see. Why am I having a problem with my internet? We need to open up for this, open this chart so that we can be able to look for a very high quality zone on a little bit higher time frame. This thing is loading so much, man. I don't know why. Let me load it again, try to load it up again and see if it opens the resource we have. I hate when I'm doing something like this, then the internet just slows down and leaves me hanging. I really hate this, yeah? So let's see if we get to see what is happening here. Yeah, we're here now. It's open. Weekly time frame. And on the weekly, this is the weekly time frame as you can see. Remember, we want to buy the euro according to the commercials. We want to buy the euro, and this is a weekly time frame, so we can refine it. That's a problem.